Hey, what's up everybody? It's Moin. You ever scroll through Instagram and see those people traveling the world living their best lives? And you're thinking, man, I wish I could do that, right? Well, guess what? You can. It all starts with investing. See, most people think investing is just for Wall Street hotshots, but that's totally wrong. It's for everyone. Whether you're starting with $50 or $5,000, this video is your roadmap to building wealth and achieving your financial dreams. I'm talking about ditching that 9-to-5 you hate and living life on your own terms. So buckle up, hit that subscribe button because things are about to get interesting. Alright, so let's get real for a second. Why is investing so crucial, especially in this day and age? Look, we all know that saving money is important, right? But the problem is, that money just sits there in your bank account, losing value every single day. Think about it. Inflation is like a sneaky thief, slowly chipping away at your hard-earned cash. Let's say you have $1,000 just chilling in your savings account. With an average interest rate of, like 0.05% if you're lucky, you're barely making any progress. In fact, with inflation around 3 to 4%, you're actually losing purchasing power. That means your money is worth less over time. That's why investing is so powerful. It's like this secret weapon against inflation, allowing your money to grow at a much faster rate than it ever could in a traditional savings account. Think of it like this: you're putting your money to work for you. Instead of just sitting there, it's out there in the market generating more money. And the best part, you don't need to be a financial genius to do it. With the right knowledge and strategies, anyone can start investing and building a brighter financial future. So, are you ready to stop letting inflation eat away at your savings and start making your money work for you? Let's do this. So, you're probably wondering, Moin, where do I even begin? What are the best investments for someone just starting out? Don't worry, I got you. There are tons of options out there, but as a beginner, you want to keep things simple and straightforward. First up, we've got index funds and ETFs. These are like the superheroes of the investment world. They're low cost, diversified, and offer broad market exposure. Think of them as baskets of stocks or bonds that track a specific market index like the S&P 500. This means you're automatically invested in hundreds of different companies, reducing your risk significantly. For beginners, index funds and ETFs are a fantastic way to dip your toes into the investment waters without getting overwhelmed. Next, we've got stocks. Now, stocks can be a bit more volatile than index funds, but they also have the potential for higher returns. When you buy a stock, you're essentially buying a small piece of ownership in a publicly traded company. This means you can potentially benefit from the company's growth and success. However, it's important to do your research and understand the risks involved before investing in individual stocks. Now let's talk about real estate. We all know that real estate can be a great investment, but it's not always accessible to everyone, especially beginners. That's where REITs come in. REITs, or real estate investment trusts, allow you to invest in real estate without actually having to buy or manage properties. They're like little slices of the real estate market that you can buy and sell just like stocks. Pretty cool, right? And finally, we have the world of crypto and blockchain assets. Now, I'm not gonna lie, crypto can be a wild ride. It's highly volatile and not for the faint of heart. However, it also has the potential for massive returns. If you're considering investing in crypto, it's crucial to do your due diligence. Understand the risks involved and never invest more than you can afford to lose. Remember, the key is to start small and gradually increase your investments as you become more comfortable and knowledgeable. Don't be afraid to ask questions, seek advice from financial professionals, and most importantly, never stop learning. All right, let's cut to the chase. You're convinced you want to start investing, but you're not sure where to begin. Don't worry, I've got your back. Here's a step-by-step guide to get you started. Step 1. Define your financial goals. Before you even think about investing a single dollar, you need to figure out what you're actually saving for. Are you dreaming of early retirement? Buying your dream home? Traveling the world? Whatever it is, write it down and be specific. Having clear financial goals will keep you motivated and on track. Step 2. Choose your investment platform. Think of this as your investing command center. There are tons of great platforms out there, each with its own pros and cons. Some popular options include Robinhood, Webull, and Fidelity, just to name a few. Do your research, compare fees, features, and user experience to find the platform that best suits your needs. Step 3. Start small, but start now. One of the biggest mistakes beginners make is thinking they need a ton of money to start investing. The truth is, you can get started with as little as $50 or even less on some platforms. The key is to start now, and let the power of compound interest work its magic. Step 4. Diversify, diversify, diversify. Remember those index funds and ETFs we talked about earlier? They're your secret weapon for diversification. Don't put all your eggs in one basket. Instead, spread your investments across different asset classes, industries, and geographies to minimize risk and maximize returns. Step 5. Be consistent. Investing is a marathon, not a sprint. The key to long-term success is consistency. Set up automatic investments so you don't even have to think about it. Even if you can only invest a small amount each month, the power of compound interest will amaze you over time. Alright, we've covered the basics of investing, but now it's time to talk about some common mistakes that beginners often make. Trust me, I've made my fair share of mistakes along the way, and I'm here to help you avoid them. Mistake 1. Trying to time the market. Listen, unless you have a crystal ball or some insider information, trying to predict when the market will go up or down is a fool's errand. Even the most experienced investors can't consistently time the market. Instead of trying to chase quick profits, focus on long-term growth and ride out the market's ups and downs. Mistake 2. Investing based on hype. It's easy to get caught up in the hype surrounding a particular stock or investment trend. But just because everyone's talking about it, doesn't mean it's a good investment. Do your research, understand the fundamentals of the investment, and don't let emotions cloud your judgment. Mistake 3. Panic selling. The market can be volatile, and there will be times when your investments lose value. It's natural to feel scared during these times, but panic selling is the worst thing you can do. Remember, you only lose money if you sell at a loss. Instead, try to stay calm, ride out the storm, and remember your long-term investment goals. Mistake 4. Ignoring research. Investing without doing your research is like driving with your eyes closed. Don't just blindly follow someone else's advice or invest in something you don't understand. Take the time to learn about different investment options, read financial news, and seek advice from qualified financial professionals. Alright, now that we've covered some common investing mistakes, let's talk about some proven strategies for long-term success in the market. These are the strategies that have helped me and countless other investors build wealth over time. Strategy 1. Dollar cost averaging. This strategy is like your secret weapon against market volatility. Instead of investing a lump sum all at once, you invest a fixed amount at regular intervals, regardless of what the market is doing. This helps you average out the cost of your investments over time, reducing the impact of market fluctuations. Strategy 2. Reinvest your dividends. Dividends are like free money, right? Well, instead of spending those dividend payments, consider reinvesting them back into your investments. This is a powerful way to accelerate your returns and benefit from the magic of compound growth. Strategy 3. Think long-term. Investing is not a get-rich-quick scheme. It's a long-term game that requires patience, discipline, and a focus on the bigger picture. Don't get discouraged by short-term market fluctuations. Instead, stay focused on your long-term goals and let the power of compound interest work its magic. Strategy 4. Keep learning. The world of investing is constantly evolving, so it's important to stay up to date on the latest trends, strategies, and market news. Read books, listen to podcasts, watch financial news channels, and never stop learning. The more you know, the better equipped you'll be to make informed investment decisions. And there you have it. Everything you need to know to start investing and growing your wealth in 2025 and beyond. Remember, investing doesn't have to be complicated or intimidating. By following the steps and strategies outlined in this video, you can take control of your financial future and start building the life of your dreams. Now get out there and make it happen. That's it. Now you know how to start investing as a beginner. If you found this video helpful, hit the like button, subscribe for more finance content, and drop a comment if you have any questions. Thanks for watching, and I'll see you in the next video.